Hey. Happy Wednesday, hump day. Welcome back to Go FUD Yourself. JD Gagnon here, my friend Kiara. What's up?
Got episode 6 today.
Yeah.
Oh, I already turned that on. What was I thinking?
We're going crazy.
The biggest thing that has been in the news the last couple of days on TechCrunch and Bloomberg and Cointelegraph and everywhere that you might read is Hong Kong. Did you read about Hong Kong?
The crypto hub. Yeah, there's actually quite a few countries that are really leaning into this. Dubai, Saudi. There's a few that are making a really concerted effort to create crypto regulation, create structures that may not be perfect, might not be the best, but at least founders and companies know that they can. The rules are clear. You may not love them, but the rules are clear. And Hong Kong has, for years been focused on becoming and has become a major financial hub. And love Hong Kong or hate Hong Kong, it's definitely a major business center in Asia. And I think it's smart, honestly.
Do people hate Hong Kong? I'm not aware of this perspective.
I don't know if people hate Hong Kong. Nobody that I know hates Hong Kong.
I was like, weird.
But I don't really know that many people, so maybe I'm just sheltered. But I think it's really interesting. And meanwhile, in many Western domiciles, I mean, they're going the opposite direction. It's becoming more and more opaque. It's becoming less and less. It was already a challenge, and now it's becoming more and more of a challenge to try to understand how to navigate things. And so I'm really feeling positive about Hong Kong and Dubai and other places. Again, do I want to move to any of those places? No, but it's definitely the changing tide. I think is that you'll see some regulation that'll start in some of these other jurisdictions, and hopefully that sparks some clarity in other areas. I think so.
Well, what I thought was really cool about Hong Kong, it's so funny that you keep saying Dubai. So I'm just going to kind of run through the history of those articles. But what's been proposed, for anybody who doesn't know, is that Hong Kong has put forward some new rules so that retail investors can trade on licensed exchanges with particular registered crypto securities. That's how they're framing it. And there's a lot of rules, but this is a huge contrast to mainland China, where you can't do anything crypto, and where even crypto operating companies and Web3 operating companies are actually listed as operating out of Dubai, for example, which is why it's interesting you keep mentioning Dubai. Just for clarity, they are covering everything like KYC, conflicts of interest, financial terrorism. There was even something on this list that just was general misconduct. So they're going to be very strict about what actually trading via Hong Kong looks like, probably because, and this is a direct quote from TechCrunch, because they are going to act as the lab for China's policymakers to test out blockchain potential with some buffer, right? So that makes a lot of sense, pretty cool. But what they're anticipating and hypothesizing is that this will allow people to move back into hiring skilled, cheap Chinese labor for their Web3 companies.
Because there is a place to legally do it. Yeah. I mean,
very cool.
This potential exists in America. Right. Like, so what's a little bit misleading about all of this is that you can actually do this already in America. It's just you would have to abide by regular securities legislation, which at least in America, I don't intimately know Hong Kong and China's regulatory environments, but in America and Canada and many Western areas, it's you could, if you wanted to, register as a security, and then that security would be eligible, generally speaking, on registered securities exchanges in the U.S. So, assuming that it was done under certain regs, like it's kind of hard to explain. We don't need to go into it here. And I'm also not an attorney, so not legal advice, not financial advice. Neither is Kiara.
Not advice at all.
No advice. Just our damn opinions, if anybody even cares. But I mean, it's worth noting that you can do that already. It's just very, very, very difficult, and a lot of the rules that exist for securities in North America and other jurisdictions don't perfectly work for crypto, even if you wanted to. And so The process is challenging. You know, the definitions are challenging. But you can already do it. Hong Kong's not like revolutionizing the way that crypto regulation is happening, but they are creating a path that people can follow. And I think that, to me, is exciting. They've come out directly and said, in the case that you shared, you know, you can trade large cap crypto tokens as registered securities on securities exchanges. And I mean, that's a very positive thing, I think. As long as you come out in the affirmative supporting some things, even if we don't love it, at least we know we're trying to make efforts, because those laws will evolve, obviously. I mean, the Securities Act of 33 in America, I mean, now there's 90 years of precedent that it's evolved over 90 years, which is why it's become quite complex, you know, and doesn't directly apply to crypto. But anyways, very exciting stuff.
I think it's really cool. And I just want to kind of reiterate some of what I was reading and some of what I would not personally predict, but anticipate seeing, is these are the types of moments where people wonder if there's going to be a shift in world order in a particular industry, right? Yeah. That's why it's getting so much traction. That's why you're seeing it everywhere. And it could, but at the same time, America is also doing similar regulatory things. We're just responding to it and reporting on it differently. So it's kind of interesting that we're like, Hong Kong's doing regulation. Woo, cool. Yeah. And we're like, oh, America's doing regulation. I don't want that. It's really fascinating to me that these are the dichotomy within the same news venues, right?
Yeah. Yeah. And I mean, again, we've all kind of been trained to say, regulation bad, security bad. Like, we don't want anything to be characterized as a security. But if you take a step back, like, and zoom out and say, okay, like long term, you know, as long as there's a path to follow, if we plan to revolutionize or at least to significantly upgrade finance globally, I mean, it goes without saying that there's going to be some requirements. There's going to be some hurdles that have to be overcome for people to participate in that space. So, I mean, yeah, I think us as consumers and, you know, consumers of news, users of the ecosystems, just need to have an open mind.
Yeah. Okay. Other great cool news. Check this one out. 20 million fundraise for Chaos Labs led by PayPal.
Yeah.
What? That's wild.
Full transparency, Chaos Labs, good friend of ours. Omer is a great friend. We were one of his first clients, if not the first client. And our experience with them has been unbelievable. And so super excited to see them get the strong vote of confidence. I mean, bear market, they've grown their ARR nicely. They've got incredibly large partnerships, Aave, Uniswap, many others, Benki, and other platforms, TBD. But yeah, super exciting for them, for their team. I know they have, you know, an unbelievable group of guys and gals working on their models and working on productizing their offerings. So it's great to see. It's great to see that in a bear market, you know, bear market, quote unquote, good projects are able to raise, you know, decent amounts of money at, you know, fair valuations. And that's exciting. What's really neat, actually, especially Chaos, is Chaos really bridges kind of the world of blockchain and crypto risk management with the world of traditional risk management. How do you model these things? It's, you know, it's kind of traditional structures and strategies now applied to the blockchain. How can you make them better with real-time information and full transparency and all these other things? And how do you have to figure out composability and what are the second, third order impacts of something over there on your protocol over here? And that experience in going through that with them has been eye-opening and also incredibly valuable. I think that, you know, the protocols, we have a much greater conviction in our decisions in using Chaos Labs. This isn't intended to be a let's shill the shit out of Chaos Labs.
I actually genuinely didn't realize that Chaos Labs was Omar, so this was totally happenstance.
Omer. O-M-E-R, yeah. But anyways, it's very exciting. But I think what's even more exciting, well, there's two things. It's a, you know, we're not in the most pleasant venture environment still. There's a lot of funds very nervous about deploying. A lot of funds are sitting on a lot of cash and getting a lot of pressure to deploy, but there's so much uncertainty in in the market that, you know, it's a weird time for venture, both for projects trying to raise venture funds and for venture firms trying to deploy. It's an interesting dance, and it's good to see that solid projects that, you know, are solid with great teams and great track records are getting funded meaningfully. And to add to that, the second piece that I think is really interesting here is that a lot of their investors are not like your crypto native VCs, as evidenced by being led or co-led by PayPal, which is incredibly exciting. PayPal, we've talked with PayPal a lot, and they have a very strong conviction and thesis on, you know, the future of blockchain. I know they definitely have, you know, fund allocations to be able to invest in crypto and blockchain, and they have an entire team dedicated to that. And so it's exciting. It's exciting to see not just PayPal. They have a lot of other kind of trad tech VCs, people that understand their business model as a way of, okay, we didn't understand blockchain before. We're scared to maybe invest in like completely novel technology that exists to a certain extent in traditional finance and has just been applied to blockchain and crypto, which is a really good entry point. Really good entry point for a lot of these traditional funds. So I think that's really exciting to see. And super congrats to the guys, Omer in particular at Chaos. Yeah.
So exciting. The thing that I understood, and please do correct me if I'm wrong here, is that Chaos Labs, part of this fundraise was built on the idea that they are very secure and that they're building security through those dependencies that you were talking about. And I thought that was interesting. I mean, I read that on Coinbase, so feel free to correct me. I thought that was interesting because it is a good time for that type of project to be raising. We've had all of these scams and all of these difficulties and all of this FUD. And so anybody who's like, hey, I have a business proposition that is anti-FUD and will cut through that is fantastic to onboard new investors, right?
I mean, it's been our approach at Benki, and when we supported the launch of Moonwell and, you know, other protocols, it's been our approach that economic risk management is non-negotiable. Like there's too much composability risk in blockchain. Like the second and third order, I've used this phrase a couple times now, but the second and third order impacts of something that happens that is seemingly unrelated because of the direct composability, a feature, not a bug, but it leads to other risk exposures that have to be mitigated. And so it's probably worth noting the distinction between what we normally consider security firms and Chaos Labs. Chaos Labs does not do smart contract audits. They do not do code reviews and all of those things. What they do is they build agent-based simulations. So they can essentially simulate any market condition, any shock, any black swan, or what I love to call dirty swans. But, you know, any of these things that may to some people seem unrealistic are still possible. And we need to understand, you know, in the event that something happens like this, can we react? Can we respond? What is our exposure? And so, I mean, I think honestly that the minimum acceptable standard of business practices needs to be raised. And Chaos Labs and supports like this, Gauntlet is another great example. We were partners with Gauntlet for a long time. You know, super appreciated all the work they did and so on and so forth. You know, firms like that are going to become table stakes, in my opinion. You're going to need to have this type of understanding of the economic risks, the structural risks in what you're doing and how it can be impacted by other events. And the whole space is going to be better as a consequence. You look at many of the things that happened in 2022 and at the end of 21, we'll call them scams, but a lot of it was perpetrated by either like pure and blatant fraud, or, you know, people didn't realize how profound the impacts of Terra Luna would be on ETH, Avalanche, Solana, like all these other ecosystems, because they're so deeply intertwined. And so I think had most DeFi protocols had this type of program, I think we may have been a little bit more secure. I mean, you can't necessarily simulate your way out of fraud, but again, you know, we've seen a pretty big shift to on-chain activities from kind of our quasi-centralized actors, because on-chain, it's transparent. Like you can see everything that's happening. You can set notifications and warnings, and you can create bots to monitor a lot of this stuff, so that if something adverse is about to happen, you know about it immediately. And there's a lot of value in that. I think it's something that is significantly underappreciated in this space. So it's exciting to see, Chaos get the recognition they deserve, and again, just being an example for what protocols should be considering a requirement, in my opinion.
Well, exactly. It's exciting to have attention from traditional finance investors, right?
Yeah,
just
absolutely.
in the space. It's very cool. Opens new doors for everybody.
Yeah, I mean, there's a couple other things that I know we have a couple other items that we want to chat about today, so maybe we can move on. But Barron's had that article that was talking about crypto stocks. So like
the next one,
Coinbase, MicroStrategy, et cetera, and shorting, and how there's like a fairly strong short interest in these stocks. And generally speaking, again, not financial advice or any type of advice, but generally speaking, when the sentiment is the worst is when there's blood in the streets, you buy, obviously. And when everybody's elated, you should be probably starting to exit your positions, which I poorly do every single cycle on both ends. I rarely sell when I should, and I rarely buy when I should. But having said that, to me, that's kind of what some of this signals. When we're seeing a lot of short interest in a lot of these things, when you see outsized short or long interest, it's usually because there's a fairly strong public sentiment, and people are pretty convicted that it's been going up long enough that they think it'll continue, which is like generally the opposite of what happens. Or it's been going down for long enough, we're pretty confident it's going to keep going down. No, it's actually the probability of it going up the longer it's been going down increases, and vice versa. The probability of it going down the longer it's been going up increases. And so it's worth noting that. I mean, whether we like the FUD or we like, the explanation, I mean, fuck FUD, but whether we like the FUD or not, or hate the FUD, I think just understanding maybe what that means from a sentiment perspective. Am I all inning right now? Absolutely not. But I think that's what that tells me. When I see a lot of this kind of FUDdy, crypto's going to zero, yada, yada, everything's going to die, regulation is going to crush us, whatever. I always think, all right, tides are turning. It's probably time to start, dollar cost averaging in, right? So pretty interesting. And
not financial advice.
Not financial. Along the same lines, I think you had another article.
Yeah. So just for clarity on the Barron's one, I wanted to spend this last kind of 5 minutes we have just talking about FUD. I mean, that's the name of the game here. And the reason I think it's so interesting is the contrast between like, yes, Hong Kong is doing this. Yes, we have some fantastic investments closing. Everything is super good. And then most of the articles I found for today were really negative. Like this Barron's one was interesting because it was written as though it was surprising that people were shorting and not getting what they wanted out of it. So the first paragraph of the article was basically like, you might think that betting against crypto stocks is exactly what you should do right now. But surprise, it didn't work out for these people. Kind of a bit of a clickbaity article, but it was still interesting from a sentiment perspective. And likewise, I found one on the Wall Street Journal. I don't have a subscription to the Wall Street Journal, so admittedly, I couldn't read the very end of the article. Maybe they turn it around. But the Wall Street Journal article is some everyday investors still bet crypto can make them rich. And then the first few paragraphs of the article are written very tongue-in-cheek about kind of like, they don't use the term idiot, but it's very much written like, can you believe that these people still sit at their computer all day and try to get rich in crypto? And the photos they have are like wildly unflattering. I don't know where they got them. And it was just super weird because we have all these great things happening, but then the sentiment that's coming through on a bit more regular finance blogs and articles and something as big as Wall Street Journal are very FUDdy.
Yeah. I mean, there's a couple really good points. There's a couple things that stand out to me. There is fear sells. Obviously, we've seen that, especially in the last decade, for sure.
Yeah.
Like media in general has just become, with the emergence of online media, I mean, the traditional channels have become a lot more taxed for viewership, right? You really have to encourage people to come look at your outlets, whatever that is, whether it's online or articles or newspapers or news outlets or whatever it is. And I think that's been unfortunate, not just for crypto, but for everything. Like, I think there's just hyperbole is like the name of the game now. Like, everything is blown to its arguably illogical end. It's not even the logical end of what could possibly happen. It's the illogical version of that. And that's what we sell, because people go, oh my God, an asteroid is going to hit Earth today and nobody's told us about this. I better panic and freak out. And that's unfortunately kind of what's happening with crypto a little bit. I feel like
it's interesting too, because some of these things, like, I'm sure that Wall Street Journal, I should verify before I say this, but I'm sure that they have articles that are like crypto sucks, crypto rules, because it's vanity metrics, right? You're like targeting to the right person and through the right thing. And so when I look at these news elements through my various accounts that are all very separate, I get wildly different opinions, right?
Yeah. I mean, it's the flavor of the day, right? Like, whatever you can do to stand out, right? That's these clickbaity type titles, and the first few lines are always, exaggerated points generally, because that's, you're trying to entice your readers. There's a lot more psychology actually than just news. And that's kind of what's annoying and crazy about it. Hopefully that's why our viewership will continue to grow here, because we can cut through the shit and just talk about it like normal people. But
yeah, I just want clean news so that I can form my own opinions, but that doesn't exist. So I have to bring it together and get your opinion and my opinion and someone else's opinion and try and find the actual facts, right?
Yeah. I mean, the other point I just wanted to make quickly on that is, like, people still think they can get rich off crypto. I mean, it's like anything, right? Can you get rich by being a professional athlete? Absolutely. Can you get rich by starting a Fortune 500 company? Absolutely. Can you get rich on crypto? Absolutely. Can you get bankrupt by starting what you think is a Fortune 500 company and doesn't become one? Absolutely. How many people that play sports as kids become professional athletes? Not that many. So it's definitely possible. But I think all of these anecdotes that we hear, like, just take it with a grain of salt, right? Like, I think we talked about this on a previous episode, but there's some idiot that put money in, not idiot, maybe smart guy, I don't know, put money in Doge or Shiba or whatever, some of these meme coins when it was like first launched, meaning they had no reason to put money in it. Like, it was actually like a clueless ape, really. And it grew to like 200 million, or would have been 200 million, or some nonsense. Like, it's absurd. And yes, people can do it. People can make money, but that is not the normal experience for most people. And so, like anything else, if you want to become wealthy in crypto, you absolutely can. I mean, I've seen people that definitely aren't the smartest people I know that have made crazy amounts of money in crypto. But if you want to do it, you have to outwork and be determined beyond what most are. So you have to learn more, learn faster, make better relationships or more relationships, and make, more structured decisions. And so, again, it's nice for people to say, oh, it's like, people like to get rich in crypto, but they're completely wrong. Yeah. Okay. That's an article that people will read just because they think crypto sucks, but it's not actually informing anybody about anything. Mm-hmm. But I think, yeah, there is absolutely ways to be successful in crypto, whether you're a founder or a trader or a casual observer, a gamer, like whether you're into art. I mean, at some point in the future, again, you have to assume, I assume, you don't have to, that blockchain technology will be similar to the internet, in the sense that almost everything we do lives or touches somehow the internet. Pretty soon, in the next decade, pretty much everything we do will have some blockchain components underneath it. And hopefully we don't have to know about it. We don't have to think about it. We don't have to, really question how that email got sent from my computer to your computer instantly. Doesn't really matter. We just know that it happens and it works and it's awesome. And so it's worth keeping that in mind, I think, when you're looking at what's the future of the space look like. There's a lot of opportunity, especially if you have a long enough time horizon. Anyways.
Was the TLDR of that fuck FUD?
The TLDR every day is fuck FUD. I mean, it's important to have, obviously, it's important to have a healthy amount of skepticism of most things that you hear. But I mean, this whole, the emotional peaks and troughs can be drastic, right? Like things move fast in crypto and violently, generally speaking. The last thing we need is news outlets adding fuel to a fire with no real, importance of the stuff that they're saying. It's just to get eyeballs and sell advertisements often. So yeah, fuck FUD. I mean, again, be aware of what's happening, but take everything with a grain of salt.
Well, go FUD yourself this Wednesday, JD.
Hell yeah, you too. Everybody, we'll see you tomorrow, 12:30.